please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, we have Lupin, that's the stock in focus. It's up close to around 6%. The US FDA, they have come out with some commentary. They've got an EIR for the Pithampur Unit 1 from the US FDA, and that explains why the stock has spiked up. But that's all the information that we have as of now. The EIR has been got, that's the establishment inspection report, and the stock has just surged to the high point of the day. We're just trying to get some more details in terms of of this unit. We'll have Ekta with us as well shortly. But for the time being, that stock's on fire. Mangalam, did you have a look at the release? Are they giving any more details about this Pithampur Unit 1 unit that they're talking about?
They haven't given any more details apart from the fact that is flashed on the screen right now. The management says that this successful outcome of the inspection is encouraging, further validates our commitment to meeting global manufacturing standards. But tell you what about Lupin? This week has been a pretty positive week for Lupin. Earlier we had the Canadian regulator giving a thumbs up to one of the units, and then we had the UK MHRA giving a thumbs up to their Goa unit. In fact, yesterday we had the management on our channel itself, and they said they have sent their monthly reports to the USFDA for Goa and Pithampur units, and expect remediation to get over by April-May 2018. That I believe they are talking about the Goa unit, but Pithampura has come in before April and May 2018 itself. We're in this at the start of April right now, so looks good. So far the stock has moved. We'll try to get Ekta in and get more details in terms of how important the Pithampur unit is. I understand Goa is more important for Lupin than Pithampur. Nevertheless, coming in from the USFDA after the Canadian regulator, and another one for the Goa unit coming in from the UK MHRA, looks like the street likes it. I mean, the stock is up 6%.
Okay, all right. So we'll keep an eye out on Lupin. Ekta will join us shortly as well. First up, we're running you through all the top stories at this hour itself. Let's get straight to the top stories. Indigo, the only airline to have explicitly expressed interest in Air India, they have opted out of this particular race. That explains why, in fact, the stock is higher in today's trading session.
Sobha Developers surges in trade after the Bengaluru-based real estate developer reported a 40% plus jump in sales growth for the fourth quarter.
And the shares of Strides and Sequent Scientific trade X their API businesses. The shareholders of Strides will get 1 share of SSL for every 6 held, while Sequent shareholders will get 1 for every 25 shares that are held.
GM Breweries, that one gains in trade today. Apart from that, we have the liquor stocks, all of them jumping. GM Breweries reported a 140% jump in the fourth quarter earnings, also announced a bonus.
And Magma FinCorp, well, they have announced a 500 crore rupee QIP at a floor price of 155 rupees a share. All right, then first up, let's get a quick check on the markets. Well, the Nifty is more or less flattish as we speak, so we'll keep an eye out on that front. But Lupin, that's the stock in focus. They've got an EIR for the Pithampur unit. Well, the Pithampur Unit 1 was inspected by the US FDA in July 2017, and we have Ekta Batra, who joins in the studio to tell us exactly what that means. Ekta.
Hi, thanks Nigel for that. Well, I just want to put this news into perspective because the kind of momentum that we've seen on the stock probably indicates that this needs a clarification that Pithampur has 3 units, Unit 1, Unit 2 as well as Unit 3. Okay. All 3 of these were inspected in 2017. Right. Now, Unit 1 and Unit 3 basically came out unscathed. There wasn't any sort of issues which came in terms of the inspection there. It was Unit 2 of the Pithampur facility which had received 6 observations, which then escalated to a warning letter. That was inspected in May of 2017. This particular Pithampur Unit 1 was inspected in July of 2017, and as per my memory, if I jog it, I don't think there were any observations for this particular inspection which had taken place. So because of that, an EIR was pretty much on the cards for Unit 1, and Unit 3, remember, didn't really have any sort of issues. So if you're talking about the unit, particularly from Pithampur, which would be under the scanner, it is Unit 2, which had received 6 observations at that point and then eventually escalated to a warning letter, and not this particular Unit 1. So that problem still stands. This is still positive news. But nonetheless, this is not the particular unit that you're talking about.
Fair point there, Ekta. It looks like the street was listening to you.
Yeah.
The stock, which was up 6% at a point in time, is now off the high point of the day, currently sitting with a gain of 3%. Ekta says it was Unit 2 which was under pressure, not Unit 1. Unit 1 already had no problems, and the USFDA has given it an EIR, which was expected. Unit 2 was the one which the Canadian regulator gave thumbs up to earlier this week, so we'll watch out for that. Unit 1 was status quo, I believe.
Yeah, that's right. Ekta is a great teacher, Mangalam, and you learned it very well in the last few minutes. So that's good news. Well, by the way, just technically, the stock hit the 100 DMA. That's at around 836. And it's come back to the 50 DMA. That's 815 rupees. So technical, just looking at that. But talking about technicals, let's get to our expert. Ashwini Gujral's with us. Ashwini, what's the trade on the Nifty? As flat as can be. It's a Friday, so we can't end flat, eh?
See, the good news is that, even after yesterday's rally, we haven't really given up too much ground. So we actually went short to see, what kind of traction shorts get. But there isn't much. But what's interesting is that ICICI Bank is reassuming leadership of the Bank Nifty. And, if this big bank gets into a strong uptrend, then, Bank Nifty becomes safe, and that way Nifty becomes more stable. So my sense would be that there is some extra money which is getting now pulled out from retail banks and going into ICICI Bank. You would recall my tweet also where I said it's probably bottomed out. So maybe if ICICI Bank can move up further, this could end up into a second half rally for the Bank Nifty. So we are now positioned for that. We've cut down our short positions. Having said that, today you have global cues which are weak, but metal stocks are kind of reversing from lower levels. So maybe the market is kind of getting over this, Trump issue a little bit. But having said all of that, I think financial still should be a buy if you have to buy something. And there are stocks which you can sell. So PC Jeweler is a sell with a stop of 296, target of 280. CEAT is a buy with a stop of 1630, target of 1675. And Vedanta is still a sell with a stop of 291, target of 278. And since ICICI Bank and State Bank both fell together last year, I think both could be making significant bottoms from here.
All right, significant bottoms from these levels is what Ashwini's call is on both SBI as well as ICICI Bank. Fair point there, Ashwini. But these pharma stocks, what would you say? Lupin currently hit the 100-day moving average, fell down. But as we speak, Sun Pharma, that one spiked. Sun Pharma too is at the high point of the day. That one should come up for you. Any calls on the pharmaceutical sector?
See, these stocks have news flow which is like one-off, one plant here, one plant there. There isn't some big macro news which, changes the business. I think it needs that sort of news to come in. I don't know what that will be. But for the moment, they are still kind of underperforming sideways.
And Fortis, what would your view be, Ashwini? It's up 16% this week, currently at the high point of the day.
See, it's fairly volatile, and it's best bought once it gets down to 125. So overall, avoidable trying to get in at higher levels.
Individual mid-cap stocks buzzing. GNFC is the one that should come up for you, up about 3% in this hour itself. It's at the high point of the day. Remember the management, you speaking to the management earlier in this week, and they were pretty sanguine about the company's prospects going ahead. We'll keep an eye out on that. But the stock on our radar right now is PSP Projects on the back of some order wins that they've got in the fourth quarter. To discuss that and more, we have Mr. Patel, the chairman of the company. Thanks a lot, Mr. Patel, for joining in on the phone line. All of fourth quarter, you've won 87 crores worth orders, and this compares with your full year order inflow of close to 2,500 crores. Usually, we see order activity pick up in the fourth quarter. What explains just a small order win in the fourth quarter?
Actually, what is happening from some of the tenders we have just quoted in the February and March, which may be concluded in April or mid of April. So this quarter, the order inflow is a bit less, but the tenders are in process.
So next year, what is your order inflow guidance, sir?
Yeah.
What is your guidance for FY19 order inflow?
It will be in the same line, about 1,000 to 1,200 crores per year. This year we have landed at 1,200 crore per year.
Okay, all right. And your total order book as of today is how much, sir?
As of today is 2,400 crore for this standalone at 17-18, and the last year's outstanding was 729. Okay. So you can say 3,100 something.
3,100 crores is your total order, sir. And I understand that a high amount of your orders come in from the state of Gujarat. Normally it used to be 90-95%. What is that number as of now? If you could help us out. And are you looking at de-risking yourself because there's so much dependence on just one state?
Can you pardon me, sir?
Sir, the total dependence on Gujarat is more than 90-95%. So what we're asking you is, what is that number as of now? What is your dependence on Gujarat? And are you looking at de-risking yourself? Are you looking at other states as well?
No, sir, right from first day we have started going out of Gujarat on a very limited base because there are huge potentials to come from Gujarat itself. So just to keep ourselves, our presence out of Gujarat, we will be focusing about 200 to 300 crore revenue coming out of Gujarat. Otherwise, most of the order books and the revenue will come from Gujarat itself.
Okay, finally, before we let you go, Mr. Patel, can you give us a status update on your Surat Diamond Bourse project? How much of revenues can the company recognize in FY19?
Yeah, this project, as we have started in December 15th, and the project is going with full bang. So this year we are going to book about 50 crores of revenue in FY18, and probably 450 crores probably will be booked in FY19.
FY19 is 450 crores is what you're saying, 50 crores in FY18, right?
Yeah.
All right. Thanks a lot, Mr. Patel, for joining in and giving us all those details. Let's shift focus then to another exclusive coming in, this time from the pharma space. CNBC TV18 has accessed the Form 483 issued to Alembic's Panelav plant in March. Ekta joins us with all those details. Ekta, Lupin put aside, Alembic now.
Yes, well, you know, we didn't actually know that this particular inspection had taken place. It is for their Panelav facility, which is basically an oral solid dosage manufacturing facility for Alembic, and it is one of their key facilities when it comes to manufacturing oral dosages for the US markets or formulations. Now, basically, this particular inspection took place in March of 2018, which is basically last month, and it was inspected all the way from 12th of March to 20th of March. Now, it has received around 3 observations. We're showing the wrong stock. It's Alembic Pharma that we're talking about, which is flashing on the bottom of the screen. So it is basically that they've received 3 observations for this particular inspection. Now, while you say that 3 observations don't look that, you know, harmful, etc., it is the nature of the observations which are important. So I just want to point out that the first observation itself has gone on for 3 pages, and I think that might probably be the biggest concern at this point in time, which basically points to out of specification testing. So that out of specification testing is basically one of the observations which have repeatedly come up by multiple FDA officers in multiple inspections recently, and that basically points to the fact that if in case you are testing a certain product, it is falling out of the specification guidelines which is provided by at that point in time. So that probably means that you need to do some amount of retesting, etc. And this particular inspection, remember, or this particular kind of observation has come up in other inspections, say something like a Lupin's Goa facility, which also had received 3 observations. The other 2 don't seem that difficult. So one is to do with you know, employee training, and the other one also has to do with something similar with regards to written procedures, etc. So I think the only point of concern would definitely be the first observation and how exactly Alembic Pharma does reply to these particular observations and what the future course of action would be.
Balaji Telefilms, another stock on our radar on the back of the company's phenomenal success with their latest outing in Alt Balaji. It's called Kehne Ko Humsafar. The stock has spiked as the street perhaps is excited to hear from the management. Nachiket Pantavedya, the COO, Group CEO of Balaji Telefilms, now joins in. Nachiket, first up, congratulations on the success of your show, but if you could tell us a little about the numbers as far as Alt Balaji is concerned. So far in FY18, how many subscribers have you added?
We're going to end up, you know, with our first year performance well above 1.5 million subscribers.
You had earlier said, you had earlier said that you will end FY18 with 2 million subscribers. So 1.5 million subscribers, that's falling a little short of your expectations, Nachiket. And how many of them are paid?
No, earlier of the so we'd said we'll have 1.3 million paid subscribers. That was our target, and right now we have crossed that already. What we also have to take into account is the enormous amount of paid subscribers that we have on the telco ecosystem, which have not taken into account across Jio, Vodafone, and Airtel. If you actually tot all those numbers up, it comes to a fairly large number. But since we want all of that to be consistent, we are very, very sure that we've got more than 1.5 million consistent subscribers, people who come back to us year on year.
Right. Nachiket, congratulations on the good success that you're seeing on this show as well. A lot of people are glued to it, so that's good news. But getting back to the numbers, 1 million, 1.3 million subscribers is what you're talking about. Give us a sense. Where do you see those numbers grow to by the end of FY19? You must be having some targets. And also help us out with the paid subscribers, Nachiket.
Everything is paid. Whatever I'm talking to you about
all these are paid. So 1.3
all these are paid. So we are not in the business of putting out subscriber numbers that are not paid or obfuscating. It's all people who pay us money.
All right.
And like I said, we will be ending up with a 4 to 5 million subscriber base at the end of the next 12 months from today.
Wow. 4 to 5 million. All right.
Yes, because our acceleration has picked up tremendously, about 30% in the last month and a half, largely because of Kehne Ko Hai Hum Safar and also our other shows like Haq Se. What this has also done to us is that get us a large base of viewers to come and sample our whole library. You must also understand that as our library grows, right now we are on 18 shows. At the end of the next 12 months, we'll be close to 40 shows on. And that provides a huge amount of acceleration for viewers to watch. Of course, all of this is predicated on the phenomenal growth rate of internet and consumption of video and internet that this country is seeing right now. The literal geofication of the industry where consumers whom we target are able to see video at low rates.
Nachiket, what does that mean in terms of revenue? The first year of your operations, 1.5 million subscribers.
We have yet to close those numbers, and I'm not going to give that out.
Okay, so in that case, just give us a qualitative number, because earlier you had said 60 to 70 crores is the revenue that you were expecting from Balaji Alt by the end of this year. Has that been achieved? Have you?
No, but I don't know where you're getting these expectation numbers from.
These are from your commentary to our channel earlier, Nachiket.
So we will be closing on all of those numbers. That's not a problem. We'll declare the numbers with a profit, and I don't want to put that out on the show right now. But we are well on our way to establish a large base of viewing masses, and we are quite on target. What we, of course, are trying to kind of ramp the pace on is that we made a projection of having 32 shows out in the first year, and we are closing on about 20 shows. So we are a little behind there. But I think the next year's progress and the amount of analytics that we are getting should put us well in place to become India's #1 platform in terms of subscribed viewers, paying viewers.
Nachiket, you're sounding all fired up to become #1 and all, so that's good news. And I think the stock market likes what you're saying. Your stock has moved to the high point of the day. But let's get back to the numbers then. 3 points I wanted to know. Point number 1, what exactly is your ARPUs as of now? Where do you see that headed? I think the last time it was 20.
Our ARPUs are basically between, somewhere between 15 and 20.
15 and 20 per month?
Yes, per month, per subscriber.
Okay.
And that's our average realization. And I think as our library goes next year, we want to get that between 20 and 25 rupees.
20 to 25 rupees. All right. So if I take 25 rupees and going by the guidance of around, 4 million paid subscribers in the next year you should easily be doing what, 160, 170 crores approximately? That should be the target?
So, I mean, while doing the math is easy, you must realize that we have to ramp up from our starting point of April to a 5 million exit point. And depends on how that ramp up happens. So if I suddenly get 5 million tomorrow, then your numbers will be accurate. So that's not going to happen.
So let's keep it simple then, Nachiket. When do you break even? That we don't require any multiplication.
800 days from today, and that's the guidance. 800 days from today.
800 days from today, so the next 2.5 years.
2.5 years
is what you're saying. So FY20 is when you will break even.
Yeah. Yes. And basically the norm for that is if we keep acquiring at the rate of 10,000 fresh subscribers, fresh consistent subscribers every day, that gives us an 8 million base at least out of India. Add to that about 1 million, 1.5 million internationally, and we'll break even our business.
All right, before we let you go, just one last word. On the EBITDA level, you haven't broken even this year, right?
Sorry, on
the EBITDA level on Alt Balaji, you haven't broken even on this year?
No, not at all. We are not going to break. This is not a business that breaks even in the first year.
All right, fair point.
It's
Thanks a
going to
lot.
take about 3.5 to 4 years.
Nachiket sounding fired up.
He's sounding fired up. He says that 800 days from now we'll break even on the EBITDA front on a positive base.
Good
but,
going.
You've got to put into perspective what he said the last time as well. He said 70 crores revenue in the first year and will be EBITDA positive in the first year itself. So we got to keep an eye out on that.
Yeah, I mean, now all eyes on FY20 in terms of subscribers for FY18. Well, 18 was at around 1.5 million. Next year, we're looking at around 4 million. Looking at the ARPU is going up to around 25 rupees. Thanks so much, Nachiket, for joining in, giving us those details. We have run out of time on Chartbusters. You stay with us.